Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we are dedicated to bringing you the absolute best trading education to help you take your trading to the next level. So, in today's podcast, we'll be talking about two most widely studied FX tools, which is technical versus fundamental analysis. Technical and fundamental analysis are two different bodies of literature which help traders to take informed investment decisions, but both disciplines are different from each other in terms of approach, assumptions, and application. So, some might be wondering what is technical analysis. For those who are new or foreign to the term, technical analysis is a framework which traders use to study price movements. Technical analysis is used based on a theory that everything is in the charts, meaning to say that all market information is reflected in the charts. So then, if price reflects all the information, then price action is all you will need to make a trade. That's the power of technical analysis. So, how do we use it, and what are some indicators and tools typically used for technical analysis? Technical analysis looks for similar patterns that have formed in the past and will form trade ideas based on a theory that history tends to repeat itself. A key tip that I will give to my listeners is that technical analysis is not so much about prediction. It's about possibilities as it studies historical price action to identify patterns and then determine the possibilities of future price direction. Some tools that I personally will use will be the Fibonacci retracement, including the extension, expansion, projection, where we look for levels where price might reverse, the Ichimoku cloud to show bullish or bearish trend, as well as stochastic or RSI oscillators. So one advantage that I will say about technical analysis is that it allows you to act accordingly to price changes and take advantage of strong fluctuations by recognizing trends, price levels, and figures. The main advantage of studying chart is that they help you recognize historical patterns to better determine at what price it might be wise to open or close a position. So one disadvantage would be that technical analysis is very subjective. Just because we are looking at the same chart doesn't mean we will come up with the same ideas on where the price is going. Hence, this might be a disadvantage because technical analysis is strongly relying on perception of the market as a whole, on supply and demand. So your idea and how you perceive the charts might differ from everyone else. The second part would be what is fundamental analysis. Whereas technical analysis involves lots of charts to identify patterns or trends, fundamental analysis involves more of economic data reports and news headlines, and even random tweets from a certain world leader before he was banned. Fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that might affect currency prices. You have to understand the reasons why and how certain events, like an increase in the unemployment rates, affect a country's economy and monetary policy, which ultimately affects the level of demand of its currency. The idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen as well. Hence, fundamental analysis requires a good understanding of macroeconomics and geopolitics. One advantage I will say that is good about fundamental analysis is that it helps in predicting the long-term trends in the market. It is generally used for long-term investments as it enables you to understand the price that the stock or asset should reach. It also allows you to find good companies or assets such to invest, such as those with strong growth potential. While, on the other hand, one disadvantage is that it requires a lot of reading. So in conclusion, which one is better? In my opinion, Technical analysis approach derives the value solely from price and volume data generated from the market. But fundamental approach arrives at the intrinsic value differently. It predicts price movement by analyzing various economic, political data that are external to the market. Hence, fundamental and technical analysis are both useful and valid, but they approach the market in very different ways. So, in my opinion, both are good if they can be used together, or if any one of the technical or fundamental analysis can make you money. Okay, that's all for now. Thank you guys for tuning in. That's it from me for today's podcast on technical versus fundamental analysis. Do remember to subscribe to our podcast, as here at IronFX, we are dedicated to bringing you the very best trading education. Until then, stay safe and trade safe.